Good morning, everyone. I'm Vince Lansing. This is the Gold Fix Market Rundown, and we do have a lot to talk about. There's the home page, basically the silver fix. Top left silver, top center silver, top right Gold Fix PM, mostly silver, and lower right hand side, hat tip to zero hedge. There's a piece that we wrote on a report that we saw. What happens if Trump gets Powell to quit? And it's a real possibility. It may be a small possibility, but if it happens, there are big implications. And a Deutsche Bank analyst breaks that down quite well. And we would say that's if you have any stocks in your portfolio, and who doesn't, it's must read. Okay. Lower left hand side is what we'll be talking about this morning. The BRICS central banks cut the LBMA middleman out. That's our title. That's not a title you'll see at CNBC, but it's a title of a story that we're putting on our editorial version of a CNBC report. Okay, let's start with the markets. 10-year yields are 447 down 1. The dollar is 98.68 up 5. SP 500 is 62.44 up 12. The VIX is 17.12 down 27. Gold is up $11 at 33.35. Silver 37.95 up 28.29. Good. It held the price level that I suggested it needed to hold, and now it's higher. But there's more to it than that if you're looking at this on a day-to-day basis. Put it this way, we're not out of the woods yet. Okay, we're getting near the edge of them. Copper, 548 up 3, almost 4 cents. That's probably propping silver up. Good. WTI down 83. Natural gas, 351 up 6. Bitcoin up 1,000, smacked off the highs, but holding its own very well. Palladium, platinum, now both off to the races. If you're a platinum person, you love to see that. If they're buying palladium and they no longer have the stomach to sell platinum against it, like they have been for 20 years, 10 years, well, now you know that there's a problem. And the problem is spreading. It's no longer platinum versus palladium. It's no longer silver versus gold. It's metals versus paper. And you love to see it. Grains are mixed. Wheat's the only one down. Okay. So the story, our title, BRICS central banks cut LBMA out. Right. This news item is a very important development. For me, as an analyst, going back to 21, the mercantilism theory that we came out with, it's a signpost saying, yep, it's still going and it's getting worse. Okay. Multiple subscribers had alerted the story to us. Much of our attention had been on silver the last few days. And we never really read CNBC. We never look for it. So we thank them, I should say, for putting this on our radar. So reading the story, and right away, it made sense, and in not so good a way for the West. But I'm a patriot, so bear with me. First, the news item. Central banks are increasingly bypassing international markets to purchase domestically mined gold in local currencies. That's a move that supports local economies, reduced cost, real cost, and friction from intermediaries like the LBMA, and protects foreign reserves. According to the World Gold Council, 19 out of 36 surveyed central banks are now sourcing gold directly from small-scale or artisanal domestic sources, up from 14 last year. So that's a pretty significant, it's like a 30% increase. An additional 4 banks are actively considering the approach. The reason I laughed at artisanal, because the East is signaling to the West wokeism. We're supporting local miners. It's a way to make the press. Anyway, it also shows how hollow Western wokeism is, because they're actually doing something about it. The implications of this are staggering in the manifestation of an accelerating global war for metals dominance. This type of supply chain action will put the LBMA out of business, or at least cripple Western access to physical gold under current mining permissions in the West going forward. We will have contextual implications for the LBMA, the West, and how this is a part of a much bigger strategy to secure all resource supply chains in a global mineral war. What the BRICS are doing in gold, they are doing in everything. Gold is the tip of an economic spear out of BRICS nations. You may look at this and say, this is bullish for gold. You're right. You may look at this and say, this is bad for the LBMA. You're right. And we're going to cover that. But what the BRICS are doing, what the BRICS central banks are doing, first of all, the Western central banks are doing too. That's why there's no producer supply hitting the market like there used to be, because it's been bought, it's been spoken for by Western central banks. They're buying the shit out of gold right now. Don't have to tell you anything different. But staying on focus of this point here, if you want to get a higher price for your natural resources, if you feel you're being underpaid for them, well, you tell the West, pay us more, and you do it many different ways. One way is to say, we're not shipping it to the West anymore. They're basically saying we're not exporting our gold anymore. That's what they're saying. Okay? And who are they not exporting it to? The LBMA. What is the LBMA? The LBMA is a final user and leverager of gold. Just like an American business that buys rare earths from China is a final leverager, user of rare earths. The BRICS want to secure their minerals as a part of a supply chain to secure their next growth spurt. And on top of that, gold will be used as the foundation to lend each other money to finance that growth. China and the Saudis will be spending a lot more money regionally because their risk will be collateralized with gold built by vaults, or held by vaults built by the BRICS. It's fucking glorious. Now, there's tons of risks with this. And I'm sure the U.S., well, you know the U.S. isn't sitting down watching this, right? That's what the 50% tariff is. That's what the securing of scrap is. I mean, we're finally getting around to it, but China's been taking silver out of Mexico before it's even called silver for years. So they have been rebuilding supply chains and developing payment chains for money flows while we have been doing dick, at least visually. Gold is perfect because it's a commodity and it has a supply chain, and it's going to be used as the base layer, if you're a crypto person, as the foundation of their whole economy going forward. So gold's going up. Anyway, this, as I just mentioned, this type of supply chain action will put the LBMA out of business or force them to actually work for a living. Full analysis of this is in the premium post. BRICS central banks cut LBMH out. There's also a nice little bonus there from the WGC. Moving on, related posts. What happens is we covered those. Goldman reiterates the bull case. That was a video. Goldman reiterates the 4,000 call on persistent China buying, and our but involves, it didn't sound as enthusiastic as normal. And then Founders AM, that was the CPI. Today's PPI, and it's out right now, and it seems to be hitting silver a little bit, doing nothing for stocks and doing nothing for gold. So silver should go back up. If it doesn't get up another 20 cents, then I'm going to be worried about the rest of the day. So silver and gold are coming off and stocks are going up. Bullshit. Okay, coming soon. This is a big week coming soon. We have a lot that will be sent to premium subscribers, and we want to just go through it. We will have a complete new analysis of market dynamics, meaning from here going forward, as Standard Chartered gets back in the gold game in a big way. They've been very big on crypto, and now they're focusing on gold. We have plenty from the WGC. We have a mid-year outlook, which, by the way, WGC has been a pariah to true gold people, but they're being influenced heavily by China now. So you're starting to see some nice stuff come out of there. We'll put it this way: it's not framed like it's like gold's going down. ETF flows continue to surprise in gold. First half of the year was like record inflows. What is the bear case? I'm going to throw water on everything. A deep dive into the emerging global platinum supply imbalance in context of gold. Platinum and gold related. The platinum supply is shrinking. The platinum demand could be growing, should be growing. We're not sure. And also, that's just gold. Also, we're going to be covering a deep dive by Bank of America into crypto, and we will be dissecting rare earths in the context of the coming war for minerals and what we're doing about it, and actually how to invest in it. This is like the chips were under Biden. This is what you're looking for under Trump. Next, Wednesday, PPI just came out, and gold's climbing back, silver stabilizing, stocks are up, dollar's a little bit weaker. Okay, so let's say PPI was a non-event, at least for the moment. Tomorrow's retail sales, that'll be significant as well. We want to shout out to Bobby Boots, who's a Goldfix founder. Just a little personal note here. He and I had known each other for years, since COVID started, because we both went to Casey's Bar in Stamford. If you ever want to buy me a drink, that's where I'm at if I ever go anywhere. Anyway, we would talk about all kinds of things. But about 2 months ago, I came in and I actually had these glasses and I put them on while I was reading. And he said, "Oh, Vince, you're the guy I've been watching for 2 years." Anyway, we became friends, more than just bar buddies. And he's a founder now, and I appreciate that. Anyway, shout out to Bobby. I know he's probably going to watch this. All right. There's the day ahead. I don't know why that's there. Let's take a look at the charts. Okay, yesterday I did not send, I didn't talk about it in the video, but I sent the chart out. And the chart was a red light, green light, yellow light. So green light, buy it above that line. This is talking yesterday. We were right around here. I said, buy it above here, neutral inside of here, and bearish below here. And sure enough, it went down. Now, if you, just to zoom out for 1 second, just bear with me here. This chart, right? 2 steps forward, 3 steps forward, 1 step back. That's what this is. Fibonacci, whatever you want to call it. But it held a level that I said it needed to hold. And visually, you can see it has to be above this top here. And now we're doing this. So if you're bullish, you're looking at this as a bull flag, right? Up, bull flag, and then higher. Now, but this long wick above perturbs me. That's someone who really wanted to sell it. And I suspect, going back to the hourly, watch. This was a big seller. I don't know why, but he was a big seller. And usually when a big seller sells, they'll use an algo to buy after a dip. He didn't buy this, okay? And in fact, he may have sold more in here, in this area here. He may have brought it down lower. And then it dropped again. And then he turned on his, I'm saying it's one person. It's multiple people, but just look at this one person. And then after this dip, he said, okay, I'll turn my algo on. And now the market climbs up in a slow, orderly fashion in a thin market, hourly at a time, 45-degree angle. And that's an algo covering shorts. It could be an algo getting long, but I don't think so. And now that algo has been turned off. Either he's done buying, covering his shorts, or he wants to see how the data shakes out. And now we're moving organically. So putting that little story together, below here was bearish. We touched it, we went back down, boom. bottom line, right? Now we're down here and you say, do we have to get up here? Yeah, we do. And I'll tell you why. We held this area and now you're up here. I want to see us get up to this area today, tomorrow at the latest. Again, we're looking at short-term tactical stuff here. And here's why. Zooming out again. Here's our bull flag. Here's our bull flag. Well, when bull flags start to go sideways and go nowhere, see if I can draw this. Take out my crayons. So there's your bull flag, right? Well, a bull flag's supposed to be broken in 3 to 5 candles. So if the market starts doing this, your bull flag becomes a shelf. And that shelf will be cracked. It may be cracked and then re-rally, but somebody will say, oh, look at that. And they will try to run some stops. So I want this market, that's why I want the market to go up to this, right? I'll be happy if it gets above here today. But ultimately, I need it to get up to here. So it's about 30, it's a lot higher, 38.40, give or take. But I'll be happy with 38 even. A pause at 38 even will make me pretty happy. I'm Vince. Have a great day.